Are you self-employed and been told no when trying to qualify for a new home loan? This is very, very common. As a business owner, it's known that you try to take advantage of as many tax deductions as possible to either take more money home to your family or reinvest back in your business. This is something we see all the time. Generally, traditional home loans, when it comes to clients that own more than 25% of their business, require that you show at least 1 to 2 years of tax returns. As an example, if your business brought in $200,000 in gross income, but you told the IRS that you had another $200,000 in expenses, well, the lenders are going to say, well, there's no income, it's zero. And we all know that's not necessarily always the case. I've argued many, many times that it's just one-time expenses. So let me give you a couple ideas on how we can overcome this. A few years back, when I started trying to find a way to get around from these one-time expenses for a client that just had a substantial write-offs that argued this is never going to happen again or not likely to happen again. The specific scenario I was trying to argue on behalf of the client is a substantial loss was on a rental property that had hurricane damage from the year before. It was actually in our local area along the Texas coast. We hadn't had a hurricane in over 20 years. So how could we literally count a one-time expense against a client and make the assumption that that expense is going to continue? Well, that was my argument. We pulled together invoices. We pulled together kind of the details of all what these expenses entail, because when you look at the tax returns, it just does not show you what that large number is. So we had the CPA and the client break it all out, and we proved that, hey, these major expenses being a roof, some structural damage items, I mean, these things last for 20, 30 years. Lenders will overlook a multitude of things on top of the one-time expenses that we can prove will no longer continue. And a couple more of those items are either depreciation for depreciating a recently acquired asset through the business returns, or even mileage, or even I've seen clients that have a car loan on their credit reports, but they write it off and it's paid through the business, but we're counting it against them personally. Working with the right professional that knows what to look for when you're self-employed will do wonders when it comes to qualifying for the house of your dreams. If you've been told no, like many of our other clients, because of expenses, you feel like they weren't competent or didn't address any possible one-time expenses or ask those type of questions, and you think you can prove that they weren't ongoing expenses, please click on the link below or give us a call.